Hey, it's Mac with PriceActionTradingSystem.com, and it is Monday. It's October 10th. This will be our chart lesson for the day. And you can see we traded down and tested these lows again today. We didn't quite get as low as we have been, but we bounced. Really, where we bounced, if you drag that measured move, you can see we bounced a perfect measured move there, and just kind of made an inside bar. So there's no real rejection there yet. So it's very likely or possible that we could go lower again tomorrow. Um, I don't see any reason to suspect that we're going to bounce yet. We may not get through this support level just yet, but we may not bounce either. So we'll just have to see what tomorrow brings. It's just really looking at the daily chart. There's no clues here. I mean, there's some minor clues that we're not necessarily going to rally out of here yet, but there's nothing that says that we're going to get through this support just yet. We'll just kind of have to see what happens. So we could just bounce here and go sideways for a day or two, and then or we could bounce at any time, or we could turn down. But this is not rejection. This is a neutral bar that bounced off that support. So there's nothing saying if this would have closed really bullish, a break above that might take us higher, but I don't see that there. So it's just showing acceptance of prices at this level, and everything's pointing down. We are oversold again, and really in 2 days we were oversold again. But that doesn't mean anything. We can be oversold forever. It's just telling you that the prices can bounce at any time because we're severely oversold again. But in a bear market like this, you can be oversold for a while. So just be aware of that. But let's flip over. You can see when we flip over to the 2,000 tick chart, it's just kind of a range type day. We did break out of that range temporarily, but closed back inside it. But let's flip over and take a look. Okay, here's a look at our 2,000 tick chart. You can clearly see the blue sideways, and the support was right across here, somewhere around 36.24 area or so, 36.25, somewhere in there. And we did go lower than that, but you can see we rallied back both times. We barely broke through here, then pushed lower, and then we rallied back, and then we tried to go lower multiple times, and we couldn't get back through that support area there. So, and it's after 5. We have opened up, and it looks like we traded up for a little bit, but they've already beat that back down. So, but you can't tell much about the first few hours of the overnight. Anything could happen there. It could be people just squaring up that didn't get square before the 4 o'clock close. So it's hard to determine anything by that. But you can clearly see we were trending down until about lunchtime, and we trended up for maybe an hour, and then it was just sideways after that. So anyway, let's zoom in. We'll go through the trades, and we'll get through Monday here. And it does look like, I mean, the volume may be a little bit lighter. Maybe it's not much. Could be a little bit lighter. You know, it is Columbus Day, and a lot of the banks are closed. So there could have been some of the, you know, a lot of the commercial type traders might not have been active today. So tomorrow might look totally different. Tomorrow might be our real Monday here in the market. It's just hard to know by looking at this chart, but I'm guessing that some of the investment bankers might have been off for Columbus Day too. I'm just not sure. But anyway, doesn't really matter. Let's zoom in here and go through the trade. 7 o'clock came, just as we're kind of going sideways here. There's actually a shorter term channel working up here. So you got a couple of different ways to look at this. I didn't draw this one, but there it is. And you get your break, and prices are trying to make a new high here on either that one, or you could say, hey, we're sideways. We did have some resistance, but each time we've gone up, we've made some higher highs here, so there's a good chance we could push on up. But you also should have drawn this trend line off these first 2 swings. So when it comes back here, it looks like we're probably going to go higher here. It doesn't go higher on this particular move, but it does come back, and it stops runs everybody's stops, and then it goes higher. So all you would have gotten out of this is a scalp. There's an easy scalp there. There's 2 points or something. and it looks pretty good. And you can clearly see that is a first entry, and then when it broke above this bar, that's a second entry long. Now you might have waited till this bar. It would have been okay. You still have enough room to get out before reaching these highs. Highs actually just slightly higher there. So it didn't matter how if you entered it on the engulfing bar or waited for this. If you waited for this one to close, it almost looks congested then because this is a bar with no body. So there's that to think about. But I kind of like it actually broke higher and turned back down. So I think most people would have probably entered here and put their stop below this bar right here, and then waited for this one to close and move it over. I'm pretty sure that's the way that played out and the way you probably would have wanted to enter it. So you had to almost play this as an engulfing bar. This is technically your signal bar, but because it's a lot of time, and that's another thing about this trade is a lot of times you don't want to enter on an inside bar, but because it was a second entry and right off the key entry point, I marked it. So that's something else to consider on that one too, which might have been enough to keep you out of the engulfing bar, and then you could still enter here. So again, you could enter it in either way. But if it breaks higher first, it's not really, you're playing it as an inside bar, so you probably have to skip the engulfing bar. So just keep that in mind. And then this would be your signal bar, and you'd enter one tick above it. Or you might let it break higher and still try to get your stop a tick back just to make sure you got a little room there. But you got room to get out regardless. So a couple of different ways to play that. When it comes back here and creates the trap, and that's the ones that they're a little more aggressive because you could continue to go lower. But, I mean, that's a triple test, and we're still looking for a retest of the high, and we're still in a range that will probably go back to the high at a minimum. So these failed breakouts can often be important highs and lows for the day, and you can see it was because we rocketed higher from there, almost straight up. Of course, we made our new high, but, there's a 21-point move before prices really corrected. And even then, it took a while to work the momentum out. And what's happening is it just created the overnight high there. So that's a pretty nice move. And so I like those kind of trades. Again, sometimes they're important, these failed breaks. So they're a little more aggressive, but for being more aggressive, you get a better reward a lot of times. So just keep that in mind. If you're new at this and you're learning, you probably want to skip those. If you're a skilled trader and you understand what's going on here, maybe you want to take a few of those. But anyway, we run up, make the new high, it kind of sets the overnight high, then we make a lower high, and then we try to go higher again, and there's a failure there, and you might have taken that one, but it's still right there at the key entry point. I'm a little hesitant to take that one without much room into that bottom there. But when it tries to go higher again and fails, this is a double top, so that's you get a failure again, and you're so far away from the EMA that, and I think you could look at that as trying to go higher 3 times. It's really 3 times off that key entry point, that trend line, so it confirms the trend line. I like that short just to ride it back to the EMA, and that's all you would have got out of it, because then it comes back and it kind of bounces around. This looks too congested, so I think you have to skip that one, and then you just get a first entry short. So finally kind of bottom out, we head back. You could look at this as a failed breakout. There is a hidden second entry there, but this channel is still in play, and we're back above the EMA. The trend line, it is right off the key entry point though, so there's some reasons to consider that one. You might mark that one green, but I just think it's too big a chance it turns down and then runs up and you get the break like it did here. This is kind of what you have to worry about. You see what it did on this channel coming back before it went lower. You have to worry about that happening here. Although we are turning down right off the key entry point, so that is a little different. And you can see that gap right there that I talked about one day before, that when you see that, that tells you your trend line's probably right. Again, don't ask me why it does it. I really honestly don't know. Um, but you'll see it over and over, and it'll verify your trend lines and support and resistance lines. It just kind of tells you, kind of reinforces that you're correct, and that'll tell you that we're probably going to go lower on a second entry here. So I like that one. It's first entry. It actually ticks lower there, but I still like it as a second. It clearly looks like two legs up, but you get your break, couple legs up to a new high. It actually breaks higher and turns down. You might trade that on the engulfing bar or wait for it to close. Either one. I like it either way. There's a lower high here, but the signal bar is too bullish, unfortunately. And then we just kind of, you can't enter down here bouncing off the lows. But notice you finally, it looks like we get a little overshoot, and then it looks we're headed up, and then you get a close outside and you try to go higher. But look, I mean, it couldn't even get back to the midline, and it pretty much is turning down off the midline right there, most likely. And so this is a second entry short off the midline in a very weak market. So we do have a break and a new low in place, but here it just looks like we're going lower. And it's a quick, easy move. I marked it green because we do have a break and a new low already in place, so every short's getting a little more risky each time as you go lower. But this bouncing, turning down off that EMA where we couldn't get back above it down through there for so long leads me to think, hey, we may make another move down. And this time we bounce right off the trend channel line in reverse. And I don't think you can't get long before it goes above that EMA. And you might have looked at that as a reversal, but we're still below that this key entry point, and so it could turn back down even if it's going to go higher. And so it's just, again, not a great setup there. Doesn't really set up well. You do get your break of your green channel and a very strong move up, and that's probably some short covering from all these shorts here as well, because it's looking like it's going to reverse. And you actually get a second entry long right here, but you've already had your break and a new high plus a huge overshoot. I think if you move this up, it still works out to a measured move there. So that makes sense. That would have been a place to look for it on this move up to run out of steam. Finally runs up. You do get a second entry short here, but I'm a little hesitant to go short here when you're in this, when you're still moving up, because you could get another. You could push for another measured leg like this one right here. This could fail and go higher for a measured move. And so I'm a little hesitant to go. Plus, it's such a big bar. It's not an engulfing bar, so you got to wait till it closes, and that's way down here. And I just think that's too big a bar, so I don't think you want to go short there. Then you're chopping sideways, and it just drops out of that again with no setup, and you're doing the same thing. You're dropping sideways. There really hadn't been a convincing close outside yet, so you're still looking for a new low here. You do have to be careful that the range lows might have moved up here, especially since we just bounced there. But again, I like this one just as being at the early. Actually, originally I had this range right here, but I moved it up, so I was playing that as a failed breakout right there. In the end, I think the range moved up a little bit. Because you see we touched it more times up here, and you got plenty of room back here. Lower high, no setup, and it does end up breaking out, but you'd expect that to fail. So if you got a good setup to go back long, you might take it. And here you got a second entry. Actually, that's not a second entry log. It's a triple test on this one. Notice the support there, and oops. We tested it. We made the low. We tested it once, twice. And this one does break lower and turn up. So I don't know if you got enough room there to trade it that way, but you might trade it as an engulfing bar. It looks like it's going to be a reversal. And you would have got a scalp out of it and probably nothing else. and we run up, we get a break outside. You actually get a second entry long right here, but we're back below the support. It didn't act as support. It looks more like it's acting as resistance. So I think it's a little too risky to go long there. And you would be looking for a long on this green channel, and you get it. It runs up here and then just turns down again. We start working sideways before it drops out again. Too congested here to try to buy, but notice quickly you get a first entry, second entry. So if it breaks above that, that's a failed second entry short, and we may finally rocket higher. You're probably at least going to test this high and get a scalp. Runs up here, gets a close outside. You try to go higher 3 times, but you also can't go short to that support. Notice how it drops down. That's basically a new high right there. It's higher than that one. So then you try to go higher once, twice, and this actually breaks higher and turns down. So when it breaks below the green bar right there, that's a failure. I like that trade. And you actually get another high there. It's higher than that one, and so you get another failure, and that confirms the key entry point. It's right back into the range support, but there's enough room to get out just in case it bounces, and you can clearly see that trend line's in play. So I like that one because it's only a first entry, and you may not get anything else, but you could enter that one on a failure as well. And the bottom finally drops on down. We come back to the key entry point here, but no setup, and we're actually just working lower. Although you can see we're making lower highs and lower lows until it finally drops on down, but that's just too congested, and I don't see anything else here before it finally bottoms out and then reverses. At this point, you get this one that runs up, you get a close outside, move to a new high, and it actually breaks higher and turns down. Again, I wouldn't go short down here, one tick below that, but you might trade the engulfing bar there because it's going to at least come back to the EMA, most likely. It does bounce, and of course you got some resistance right there. You can't really go long right into that. It finally breaks out and comes back, and you get a failed second entry short, which is going to give you a trap. And I figured that would probably take on off. You see that it doesn't, but it actually came back one more time and failed, and then went higher on a second entry, and it took off. You couldn't trade this on a second entry. You might say there's a triple test, but that signal bar wouldn't be good enough. So really you're trading a failure here, and it works, but and I liked it in real time, but you can see it struggled a little bit. Luckily, you could have easily got stopped out before it went higher. So I don't, after seeing that after the fact, the way it worked out, maybe that's a green one. But I really thought it was time to reverse. I was really looking for a failure. So to me, I thought that was probably a sure thing, which it was. But it probably shook some people out before it went higher. So it didn't play out exactly like I thought. Is the reason I'm saying you might look at that as green now that it's after the fact. So, but in real time, I liked it. I mean, if you move this to the far right hand side of the screen, you can't see what happened. We should have been. You would think we were going to go lower here, and then we make 2 higher lows and a failed second entry short. I like going long there, and you see where it comes back, but it does end up rocketing on up. And of course, you draw your trend line there. And it runs on up and it starts chopping sideways again. And notice how each of these highs, these lows are higher lows each time until it bounces right off the key entry point. And that's actually a first entry, second entry. It's a little higher second entry. And the other thing too is this is only like 6 ticks, 6 ticks. And you got plenty of room to get out. That turns out to be very nice trade. And once again, you can see that gap right where that support resistance line is. And it, again, don't ask me exactly why it does that. It's just something I noticed years back, and I've learned to pay attention to it. And I learned that it pretty much confirms my trend lines and my support resistance lines because it works both horizontally and on your angled trend lines right up, like so. So keep an eye out for those. We run up on this cyan, we get a break, couple legs up to a new high, and then we make a lower high here, that one's really, really tempting, but that's a lot of momentum up, and we could be into a new uptrend. I just don't think you can take it. Um, you get a failure here too, but it's right at the EMA, and then you see that little bitty bar. I mean, it's hard to believe that we got a bar with 3 ticks. You can't go short, in my opinion, there though, because it's right into some previous support, and you can see how it just kind of it drops down, and you finally get a second entry here though. Look at that low, and you get a first entry, and this actually breaks higher and fails and turns down. Again, you're pressing it a little bit going long at the lows, but when it went by there, I like dropping a limit order in there and see if you can get in field and with enough room to get out, and then trying to get out there. Um, but even if you don't like that one, um, this is still like a another leg down with a first entry, second entry. So you could almost treat that like a reversal too. It's not ideal because it does make a lower high here. So it's really hard to say by the count that that's a failure, but it's clearly trying to go higher a couple of times back and right off the EMA, and we're not back down to the lows of the range yet. So I like that one just to, if you want to be a little aggressive. And of course it bounced, and we finally get a little rejection off the lows, but I don't think you want to go long there just yet. Actually, because the last breakout went much further, so it could bounce there and turn down. I'd want to see a reversal or higher low or something here, and you just don't really get that set up. There is a higher low, but it's not a very good setup, and the failure, and because it doesn't break lower, that's technically not a failure there, so it doesn't set up right either. And then you can see we're suddenly just reversing and chopping down, but look at that move down. You try to go higher once, twice, and then you could count that really as a double bottom, and you get a first entry, second entry, and it does give you the third touch of the key entry point. There's plenty of room to here, and definitely plenty of room to here, and that's exactly where we end up down here. But that's a quick, easy move there. It comes back too quickly, so you really don't get a lot out of it, but you could have got a few points on a runner there. And then it bounces. We run all the way back up. I don't see anything. There is a reversal here, but you can see it's right back at the highs of this, and I think it's a little risky trying to trade a reversal there. It just looks like we're going sideways now with this roller coaster stuff. So you got to be real careful with a reversal there. Just play the short-term trend. Comes up, tries to go higher once, twice, 3 times. You got a new low there, first entry, second entry, so it's a second entry short, plus you get to break outside the green channel, move to a new high, and it turns down. Plenty of room back to the EMA, and maybe it goes lower, so I like that trade. And that takes us into 230, and I didn't see anything else after that. So, yeah, that's how I saw it today. So there's probably a couple other green ones in there if you really, if you looked closely, and I'm sure there's a couple you might argue for, but you're better off to stick to the blue and red trades and the sure things, and you'll have a lot less headaches and a lot less losses that way. You'll get tripped up much less often. So anyway, I'm going to wrap it up today. I need to get out of here a little bit earlier than I usually do, so I'm going to wrap this one up. We're almost at 25 minutes anyway, but I'm done for today. We'll be back again tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.